Traders at Axis Bank say market participants are focusing on the short end of the curve pending the release of the first quarter bond auction calendar by the DMO, while the belly of the curve remains muted. Akpevwe Oputu, team member, Treasury Coverage at Axis Bank, joins me now for some market updates. Thank you so much for joining us, and a Happy New Year to you, Akpevwe, for your time.
Happy New Year to you too, and thank you for having us on the show.
Let's start doing an overview of the market activities we've seen play out from Monday up until now and the weight we are expecting this first quarter bond auction. That still gives off this air of uncertainty.
Okay, so starting from the money market space, we saw system liquidity open the week around 370 billion, and we saw an almost maturity of about 10 billion coming to the system on Tuesday. And despite the NTB auction that was conducted on Wednesday and the maturity paid out on Thursday, we still saw huge system liquidity in the money market space. So we saw rates in the space trading around 9.5% on the OPR and overnight rate, and this actually affected what we saw in the Treasury bill space. So we saw a lot of bullish sentiments in the Treasury bill space, buying along the long-tenured NTB trading around 6%, sub 6% level. So we actually seen bullish sentiment all through the week on the Treasury bill space. And despite the NTB auction that was conducted on Wednesday, where 56 billion was on offer across the standard tenor, we saw a subscription of about 389 billion, and the total sale remained at 56 billion. There was a drop in the stop rate across the standard tenors. The 91-day closed at 2%, the 182-day closed at 4.33%, and the one-year bill dropped by 119 basis points to close at 7.3%. So we've seen the bill currently trade in the market sub 6% levels, and this is due to the liquidity that we've seen in the system. However, on the bond space, the reverse is the case. We continue to see bearish sentiment on the bond space as traders expect the bond auction calendar to be released for the first quarter of the year, and rates are expected to trade higher at the bond auction, and so these are some of the reasons why we see traders sell off on the bond space. So we'll continue to see the bonds trading higher. Despite the rates, the bids in the market, there's little offers to cover up on those bid space. But on the FX space, we saw the SME and invisible intervention by the Apex Bank on Monday. We also saw, we're expecting the release of the retail SMIs auction that was conducted, yes, on Friday. So rates continue to trade around 461.5 naira to the dollar in the I&E space. But at the retail SMIs auction that was conducted on Friday, we saw the spot rate trade around 492 to 500 naira to the dollar, while the forward rate still remained around the 460 naira to the dollar levels.
And what are some of the highlights we should also expect that will define next week? We also have inflation lingering in focus.
Okay, so we still expect to see the inflation figures released. We're currently at 21.67%. There's a lot of liquidity in the system, but today there was the usual CRR maintenance by the Apex Bank. So we've seen the liquidity thin out from the market. So we expect traders to go into the week trading cautiously, a bit of buying interest on the Treasury bill space because the next auction will happen in another 2 weeks. So we expect to see some buying sentiment on the short end on the call. However, as we await the release of the bond auction calendar, we'll continue to see bearish sentiments on the bond space.